Your credit card says 24%. You're actually paying closer to 27. That gap has a name, and banks hope you never look it up. Banks use two different numbers to describe interest: APR and APY. You have seen both. Here's what they don't explain. Banks choose which one to show you, and they always pick the one that makes their deal look better. APR stands for annual percentage rate. It's the number on your credit card, your car loan, your mortgage. It sounds like your total cost for the year. It is not the full picture. Imagine you borrow $10 and owe $1 each month in interest. Simple enough. But next month you also owe interest on that interest. APR pretends that extra cost never exists. When interest compounds monthly, your real yearly cost climbs above the stated APR. At 24% APR, your actual cost is 26.8%. That is not a rounding error. That is the math. On a $5,000 credit card balance, that difference costs you about $90 extra every year. You were never told. It was never in the headline. APY is the honest version. Annual percentage yield already includes the compounding math. When you see APY on any product, that is your real number, what you actually pay or what you actually earn. Banks show savings accounts in APY because it sounds higher. They show loans in APR because it sounds lower. Same math, different label, always in their favor. A savings account advertised at 5% APY and one advertised at 4.89% APR are the exact same account. Same math, different label. Banks know which one gets more signups. Look at how the gap grows as rates go higher. At 12% APR, you're really paying 12.68. At 29.99% APR, you're actually paying 34.5%. The higher your rate, the bigger the hidden cost. On a $10,000 balance at 24% APR, you pay about $2,682 in real interest over 1 year. The bank advertised $2,400. The gap is $282 you never planned for. For any debt you take on, ask for the APY. If they only give you APR, add 10 to 15% of that number on top. That estimate gets you close to your real cost. For savings accounts, APY is actually the truthful number. Most high-yield savings accounts already advertise APY. So on the savings side, you're getting the real math. The hiding only happens when you owe. One rule covers everything. For anything you owe, demand the APY. For anything you earn, APY is already the real number. If a lender won't show you APY on a loan, walk away. Step 1. Open your credit card app. Step 2. Find the APR on your statement. Step 3. Search APR to APY calculator and type in your rate. Step 4. That number is what you are actually paying. Build your payoff plan around it. Banks built this system with two numbers, so they always get to pick the smaller one. Now you see it. Subscribe if you want to keep seeing the math they hope you skip.